Give it another minute and then we'll go.
It started to record. I can just cut the front end off afterwards.
Okay, all right. Well, then let's go, Henny, and I'll do the introduction. So good morning, everyone. Welcome to another OBG Zoom presentation, and we'd like to thank Paul Miller for making himself available today. Paul doesn't need much introduction. I'm sure if you're on LinkedIn, you've been following him with interest, and I think he was also quite prominent at the recent junior mining Indaba. Just by way of background, he graduated at the University of Natal with a BCom degree, honours cum laude, and then he did an advanced management program at INSEAD's campus in Singapore in 2015. The key thing about Paul is he is a business development specialist with a background in sales, consulting, financial services. He's had 2 sessions with Nedbank CIB. He's been involved in minerals exploration and mine development and run real mining operations. Importantly, I won't sort of go much beyond this, he was founder and director of Keaton Energy, which was then a startup coal exploration company. He led the team which took the company through a listing and equity capital raising on the JSE, project financed and built a 2.4 million ton per annum open cast colliery, and acquired and turned around a distressed ultra low seam anthracite colliery. So he's ideally placed today to talk as a practitioner about our minerals mining industry and how we should be looking to hopefully resurrect it one day. So over to you, Paul, and thanks for making yourself available.
Thank you, John, for the kind introduction. Let me just share my screen and I confirm that you can see the opening page of the presentation there, John.
Yeah, perfect. Go for it.
Thank you very much.
Thanks.
Thank you for that introduction. Just to be clear, it's quite strange for me. I've watched some of your recordings on YouTube of your presentation, and I'm neither geologist, scientist, nor engineer. So I'm hoping I'll bring a slightly different perspective to some of your normal presentations. And that's why I've described myself as a practitioner, and that a practitioner being someone who's done the full gamut, raised the money, employed the people, built the mine, and tried to really make things happen, I suppose, from an entrepreneurial point of view within the South African mining industry. And this presentation is based on a presentation I recently made to the Junior Indaba, Bernard Swanepoel's Junior Indaba, and part of my motivation for making it a slightly longer version to yourselves is because it can then get into the public domain. Before I start, I just want to deal with a definitional issue. I'm going to talk a lot about junior mining, but like so many things in South Africa, junior mining is kind of in the eye of the beholder. It's not a defined term. So I want to just give my definition of what junior mining is. Junior mining is not small scale mining. It's not even medium size mining. Junior mining is the early stages of the development life cycle of mines generally. So in my mind, and as it's used in Canada and Australia, junior mining is all the mining related activities that take place before a mine gets into production. So it's exploration, project development, all the sorts of things that explorers and people who lead studies would be familiar with. It is not someone operating a sand mine in Bronkhorstspruit or Dimension Stone in Rustenburg. Those are equally legitimate mining activities, but they're not junior mining. You can call them small scale mining or emerging mining. But when I use the term, I'm explicitly talking about exploration and project development pre-production. Just to give some background on myself, I started working in and about the mining industry by accident, really, when I started as a junior management consultant on the deep level gold mines near Carletonville. I spent 6 months working on underground productivity improvement at number 4 shaft East Driefontein. Now, I'm not entirely sure that my efforts actually led to an increase in productivity, but I certainly enjoyed it and was a fascinating time for me. I then moved, some years later, I moved into investment banking, where I was involved in equity capital raisings and mergers and acquisitions, and for some reason, because I'd spent some time in mining, I ended up specializing in the junior sector on the JSE. At the time I was involved, it was a time of tremendous regulatory change in South Africa, and it had opened up a lot of opportunities for new entrants into the industry. Fortunately, it happened at the same time as the commodity supercycle, which we all know came crashing against the global financial crisis in 2008, only to restart shortly thereafter on the back of stimulus spending, peaking probably in about 2013. We had a lot of success prior to the initial crash, listing companies on the JSE, pioneering inward dual listings of foreign listed mining companies, and we saw for a brief period new mines being financed by both local and international investors, the projects being financed and then the mines being developed. It was a great time to be involved in the industry. And you can see from my chart, it's pretty clear. This is a chart of the net number of listed mining companies on the JSE. Now, bear in mind that mining companies don't necessarily spend their entire life on the JSE as mining companies. So it was quite a study to get this information. What you can see is basically the end of the dissolution of the mining finance houses prior to about 1998. Then an ongoing decrease in the number of mining companies on the JSE till about 2004, which was just when the MPRDA and the charter were promulgated. There was a flurry of activity with lots of on the back of the global or the commodity boom and the new regulatory environment, where we saw a net increase to just over 50 listed mining companies on the JSE. It kind of stayed pretty constant until about 2013, and then it's been downhill from there. So in 1980, the JSE traded more than half the world's mining market capitalization. And by 2020, we now have less than 20 companies that actually are listed on the JSE that operate mines in South Africa. We now have a few companies listed on the JSE that operate no mines in South Africa. So that's quite a story you can see here. At the time when the global financial crisis hit, I moved on to become founding managing director of a startup coal exploration and development company, where very fortuitously we had listed on the JSE in April. We've raised our equity capital before the October crash. My team, the team I was involved in, was able to go from first exploration borehole into full production within 3 years, raising bank project finance along the way. We eventually developed an open pit coal mine, ran 3 washing plants, and took over a distressed underground anthracite mine. We went from 6 employees to 1,400 in those 3 years. And I really saw the positive impact that developing a mine or taking over a distressed mine, as we did in a remote region like Vryheid, can do. Sadly, I don't think we could repeat that today. After 5 years in coal mining, I went back to banking to work in the origination of mining project finance deals in South Africa and on the rest of the continent. It was a business development role, which involved a lot of travel to Perth, Toronto, and London. Although the trips I enjoyed most were the ones to remote mine sites on the rest of the continent. The team I was involved in when I went back to banking financed mines in Liberia, Kenya, Tanzania, Malawi, Botswana, Namibia, but the greatest part of our business remained in South Africa. What I've just shown you now is the Amaranth CX database of operating mines. We track at Amaranth CX, we track 788 mines across the continent, of which 443 are in South Africa. These are both big and small mines, but exclude construction materials like sand and aggregate, most alluvial diamonds and dimension stone. If those operations were included, South Africa would have about 1,500 granted mining rights, of which about 1,300 are currently operational. So here in South Africa, we're still the greatest mining industry on the continent, one which remains of great significance internationally. But what this one-dimensional view does not show is where investment is flowing, or what the remaining life of South Africa's mines are. That is, what this chart does not show is how much longer will the greatest African mining industry last. Sadly, it's my view that the South African mining industry will be gone. There will be no significant mining industry left within 2 decades on the current trajectory. I just want to ask you to do a mental exercise yourself and try to think of all the existing mines or advanced projects in South Africa that you are aware of that have a remaining life in excess of 20 years. That is, will be operating beyond 2040. I've done the exercise myself, so I can come up with a few manganese mines, a few collieries, Mogalakwena in the Bushveld, perhaps Ivanplat's new, Ivanhoe Mining's new Ivanplat's project, maybe one of the iron ore operations, Venetia's underground operation, a couple of chromite operations. If you can name more than 10, I will be impressed. And if you can name more than 20, I must ask you to please give me the list. I've often asked senior mining people, like senior executives or my favorite current employees of the Minerals Council South Africa, if they would recommend that an 18-year-old son or daughter pursue a career in a core mining profession. Most of them, if they're honest, sheepishly answer that they wouldn't. Just ponder that for a moment. The supposed advocates for our industry hardly rate their own chances of keeping the industry alive to the extent that they would advise a young person to pursue a career in South African mining. And yet, the contradiction here is that WITS has a class of 100 in their first year mining engineering currently, most of whom are NSFAS students, not company bursary students. Add all the other disciplines across all our educational and training institutions, and it seems to me that we are setting up thousands of young people to be unemployed or have to emigrate if they want to work beyond about 35 or 40 years of age. This is a sad end to the South African mining industry, which simply does not have to be the case. In my previous roles, I spent a lot of time reflecting on what it took for a country to have a successful, thriving mining industry, why certain countries were so much better at it than others, why investment money flowed into some countries and not others, and what policies needed to do to make it happen, what policy makers needed to do to make it happen. I've collected my thoughts into a couple of concepts or ideas, which I'd like to share with you now. So on to this first concept. I believe there are 3 absolute or obligatory requirements for any aspirant mining country to have in place. That is, to have a growing, thriving mining industry. These are ongoing investment in the country's geological endowment, a fully functioning regulatory regime, and the ability to attract a share of investment capital flows. It helps, of course, also to have mining skills, infrastructure like ports, airports, roads and railways, and of course, power and water. These help, but without the three obligatory or essential requirements, you will have no new projects and your mining industry will be in decline. Minister Mantashe this week asked that investors should tell him what the obstacles are to investment at this week's Prudential Investment Summit. Ostensibly, he wants to start a negotiation with those investors on the terms under which he would let them invest. He seems to think that attracting investment is a negotiation, like annual wage talks. It's not. Each country sets up its stall in the marketplace for investment and competes for investment. Surround your stall with mining charter barbed wire and dysfunctional regulatory system landmines, and investors won't negotiate. They'll just go to a more attractive market stall. So to illustrate this concept, I've drawn it as a Venn diagram. It's only if you have all three overlapping circles that you can have a growing mining industry. All three have to be in place. If one is missing, you will have no industry growth at all. Supporting the Venn diagram are the three nice to haves of skills, infrastructure, power, and water. If a project is rich enough, by that I mean the grade of the targeted commodity is high enough, then the project can carry the costs of solving a skills problem or an infrastructure problem or the provision of power and water. Of course, the project will be unlikely to ever be discovered if there's no primary research investment into a country's geological endowment, if information gained on past abandoned exploration programs is not curated and handed over to the next generation of prospectors willing to give it a go, if prospecting rights are hoarded and not turned over through regulatory design or paralysis, or if a regulatory environment is dysfunctional. And of course, no project can be built without being able to attract capital flows. So an example I like to use of a project that's rich enough to overcome all sorts of infrastructure challenges is that of Alphamin Resources in North Kivu in the DRC. Here the mine, which happens to be a tin mine, is especially rich with grades in excess of 4.5% contained tin, making it many times richer than the next richest tin mine in the world. As a consequence, Alphamin was able to overcome its logistics and infrastructure challenges. That mine would probably not have been built at lower tin grades unless it was in a different part of the world. Another is the Danakali Potash, or another example is the Danakali Potash project in the Danakal Depression in Eritrea, one of the driest places on Earth. It's rich enough to build a 70-kilometer seawater pipeline to bring water to the mine. I'm going to come back to these three obligatory circles in the Venn diagram later in the presentation, but now I'd like to introduce a new concept. When I was working on that underground productivity improvement project at East Driefontein, I was introduced to the concept of a pay limit. Bernard Swanepoel tells me that this is actually a very poor management tool for deep level gold mining, but just bear with me. What this referred to, or what I learned at the time, was this referred to the amount of contained gold required to be present in the unmined ore in order to cover the costs of mining that ore. It was used by mine planners, I'm sure some of you have used it, to avoid losing money by mining unprofitable ounces of gold. The mine planners knew the cost of mining ore in a particular stope or section, and they knew that the expected grade of gold contained in the remaining unmined ore. Depending on the prevailing gold price, the mine planners could then optimize the mine plan. So in one area of the mine, you'd need at least 4 grams per ton. In another, you'd need 4.5 grams per ton. If the gold price changed, you'd have to adjust your planning. If your cost changed, you'd have to adjust your planning. But this concept of pay limit was used as a planning tool. Now, I believe that if you can take this pay limit concept and you can extrapolate it to a country's undeveloped mineral resources. So if you can suspend disbelief for a moment and imagine that the totality of a country's mineral resources could be known, that is, that the work of all geologists everywhere was basically done. Every study, all information, every borehole, geophysical survey, every report had been written. Basically, your whole profession had collectively retired, having done everything they possibly could. If you had all that information, then your mineral resources could be divided up into individual projects, and those projects could be ranked and rated by how good they were and how much value they had. So you can imagine then a column chart showing each project with the most valuable one on the right going all the way down to the lowest on the left. You would have thousands of potential projects, all at different valuations. Of course, you would have to have normalized all the projects into, say, gold equivalents or something so that they were directly comparable. Once you had this, you could conceptualize the country pay limit of that particular point in time. Now, of course, these are undeveloped projects, so the country pay limit does not only consist of the direct costs of extracting the underlying mineral, but it would also include a risk premium for the perceived or actual risks of the country. A risk premium is required to be paid to attract investment, and it's different for every country. If the risk is high that a country might default on its external debt, like Zambia just has, or run out of foreign exchange reserves, or expropriate assets without compensation, or introduce or increase local ownership or compel procurement requirements, or add all sorts of different social obligations, or dramatically change its tax regime, or that social unrest could break out at any point, or if your mine will be attacked by gangs of criminals, then this premium goes up. If the opposite happens, the premium goes down. Risk is a cost that is added to a pay limit for a project when an investment decision is being made. Now, I've tried to represent this idea conceptually in a simple diagram. You can see the left vertical axis represents the normalized pay limit as the gray bar across the chart, and the right vertical axis represents the project value. All the projects are ranked along the horizontal axis. You can see here that in this particular chart, the pay limit is pretty high. Now, if you go back to the concept of the Venn diagram model, we can see that if a country invests in its geological endowment, it can start to attract explorers. And if it can develop its regulatory regime into a world-class regulatory environment with transparency, predictability, and that is corruption-free, then it can begin to drive down that risk premium and thus the pay limit. And it can also drive down actual costs by providing the nice-to-haves of skills, infrastructure, power, and water. Surprisingly, this idea that there are projects that could be built but will not be built because the government is the direct cause of both a high risk premium and loading a project with costs like additional taxes and social obligations does not seem to have taken root in countries like South Africa, Zimbabwe, or more recently Zambia and Tanzania. Existing mines have no choice but to buckle to the demands. But the mines of the future will simply not be built as the government-imposed pay limit is too high. It also shows how the incumbent miners with sunk capital, sadly many of your previous employers, are not good advocates for the future of the industry. They are too focused on protecting their sunk capital. Let me say that again. Incumbent miners, especially ones that can invest anywhere in the world, are not good advocates of a single country's mining industry. They simply go where the pay limit is lower. Why beg to get the pay limit down in South Africa when you can invest anywhere? It's humiliating. We can see that in the MPRDA and the original mining charter, the Chamber of Mines at the time had no interest in ensuring future exploration spending in South Africa. They completely understandably needed to protect the sunk capital which they couldn't move. They knew that they had no option, whereas they had plenty of options on where to spend new capital investment. In other words, they focused on protecting the capital they couldn't move, knowing that the capital they could move could go anywhere. Sadly, this means our politicians believe they can bully mining companies because they've been so successful at it, and they can negotiate terms for new investment. It's simply not the case 20 years later. South Africa needs to compete for new investment, not demand it like a union shop steward. I like to think the duty of a policymaker and a regulator is actually to drive down the country pay limit, thus attracting investment into more and more projects and leading to more and more economic development. The reverse has been happening in South Africa. Every new iteration of the mining charter, every failure of regulation, every act of corruption or maladministration that has to be litigated in the courts increases the pay limit. What you want to see is a pay limit that is driven down, with more and more projects becoming economic as the risk premium and actual costs of doing business are reduced. So here we see our pay limit coming down with more and more projects being exposed. Driving down the risk premium portion of the pay limit, making more and more projects available. I want to go back now to explore the Venn diagram model in a little bit more detail. Firstly, I think it is important to understand where the money that is invested in African mining comes from and which are the countries that most benefited from it. Where do capital flows come from? Literally, where does the capital flow from? A few years ago, my team and I examined 5,000 global public market equity capital raisings by mining companies, with the earliest being in February 2013. We were able to categorize the vast majority of the amounts raised, with about 10% of those 5,000 transactions being major globally diversified companies, which then deployed the capital globally. What we wanted to get an idea of was where the mining money comes from and where it goes to. And there were some limitations to the exercise. This was only new equity capital raised by publicly listed companies. It didn't include other forms of capital, like equity raised and deployed by private equity funds, self-generated investment from cash flows, debt, state-owned entities, especially Chinese ones. The data reviewed covered $123 billion of capital raised on stock exchanges in 36 countries and deployed into 105 countries, including the 36 source countries. The data was biased towards juniors and mid-tier companies because they are generally the companies that raise capital most often. What you can see on this first slide is that the vast majority of public market capital has been raised in China and North America and invested in China and the US. This is not surprising or that useful for our purposes as an African mining industry. If we limit the analysis to only African countries, the picture changes. Almost all the money raised on public markets that can be separately identified as being destined for Africa was raised in only 4 markets: Australia, Canada, the UK, and South Africa. If you look at where money went in Africa, the most significant portion went to South Africa. However, if you want to know that, if you know the time period, it turns out that a lot of South Africa's existing operating companies had gotten to a degree of trouble. Remember, this is 2013 to about 2019, and had to repair their balance sheets by raising additional capital. The money raised by South African companies was not to fund new investments. It was to fund or repair balance sheets. So I think you get a clearer picture if you actually exclude South Africa. And it turns out on closer examination that the money raised on the JSE was invested in South African companies only. Very, very little money raised on the JSE was invested elsewhere on the continent. So if we exclude South Africa, and I think you should, you can see that basically all the money raised from public markets and then invested in African projects comes from Australia, Canada, and the UK. These are undoubtedly the greatest markets for early stage mining finance. It isn't always available from those markets. Sometimes they get excited about things like cannabis companies, etc. But it is never available from anywhere else. If you look at where the money went, you can see that Mozambique did well in the time period, with money raised to build a mineral sands project and a large graphite project. This was development capital, not exploration capital. The time period also captures uranium and gold investment in Namibia, and then we also see money raised for gold projects in Burkina Faso, Tanzania, and Ghana. So what can we conclude? Early stage investment in African mining comes from essentially 3 places: Australia, Canada, and the UK. It does not come from the JSE. It is more difficult to draw conclusions on where the money is being invested, but there appear to be 8 countries that received over 75% of the investment in the period we examined. Mozambique, because of those 2 big projects; Namibia, Burkina Faso, Tanzania, Ghana, DRC, Mali, and Mauritania. Obviously, this data can be distorted by lumpy investments like those large development projects in Mozambique. The point here is that any country that wants to improve their ability to raise capital need only to look at which countries are being favored by the Canadian, Australian, and UK investors. It is those mining finance ecosystems that provide the early stage risk money. So when Minister Mantashe asks investors to come and tell him what the obstacles are to investment, he would have to go to Canada, Australia, and the UK to ask them. However, they have the entire world to invest in, and I'm not sure they'd give him the time of day. What you could do is phone up stockbrokers, private equity managers, and financial advisors in Perth, Toronto, and London, and ask them what the successful countries are doing right, and then try and emulate those successful countries. Now let's return to our two remaining obligatory requirements. Great mining countries invest extensively in primary geological research and make information publicly available to all comers in the most convenient and accessible way possible. They recognize that this primary data can be a significant competitive advantage in the game of attracting mining investment. This involves regional surveys, mapping, primary academic research, and the collection curation of historical data. Importantly, it also involves enforcing requirements for exploration companies to submit all exploration data compiled to an appropriate standard to the authorities when they relinquish any exploration ground. Botswana does this well. South Africa has not for almost 40 years and is now trying to play catch up. Thanks to Henny, who introduced me to this chart, this is the only map, that I've been able to find that attempts to show all prospecting and mining rights in South Africa. It's from 2010, and no, it wasn't published by the Department of Mining Mineral Resources, and it wasn't published by the Council for Geosciences. It was published by the Endangered Wildlife Trust, who had some GIS specialists draw it up because they needed to know where mining activity was relative to the most sensitive environmental parts of the country. Now, that's quite an indictment that the only known map of South Africa's mineral rights, mining rights, and prospecting rights had to be prepared by an environmental NGO. But worse, what this tells you is theoretically, in terms of the law, every one of those red areas should by now have had a approved exploration or prospecting works program fully funded and implemented, and all the data should have been submitted annually to the Council for Geoscience. Since this map is 10 years old, most of these prospecting rights should have expired. The ground should now be available again, and there should be a treasure trove of information already available. That's my, bearing in mind, I'm not a mining lawyer, but that's my understanding of how the law is supposed to work. Patently, that's not the case. Poorer countries and the rest of the continent have to rely on multilateral organizations and donors to pay for things like airborne geophysical surveys. They also actively try and recruit wealthy international universities to come and do field research and publish papers in international journals. The important thing is there should be no gatekeeper preventing access to data that is in the various government repositories. Unfortunately, in South Africa, it appears that this data is either deliberately or through neglect, difficult or expensive to access. Now, anecdotally, I've heard that if you want to access data at the Council for Geoscience, you first need to prove that you've got a prospecting right over the land in question. So in order to do early non-competitive, in order to do early desktop reviews of pre-competitive data, you have to first prove you've got a prospecting right. Now, since 2014, in order to get a prospecting right, you also have to get National Environmental Management Act approval, NEMA approval with a full environmental impact assessment. So it's now running at about R500,000 of environmental studies to get a prospecting right. And only then you're able to determine whether the prospecting right is over prospective ground, because it's only then you can access the data from the Council for Geoscience. It sounds so incredible, I'm not even sure it could be true. When I mean data should be accessible, I mean it has to be accessible to that foreign investor who's sitting in Perth, Toronto, or London, because that's where the money comes from. So you've got to make it online. You've got to make it available online, and our competitor countries are already doing that. That, sadly, is where speculative investment comes from, and you have to provide it to those investors so they can make choices as to where they want to invest. Now, moving on to the requirement of having a functional regulatory regime. This could be a full-day seminar in itself, but in the simplest terms, this means that a country should offer an efficient and transparent regulatory service with clear and predictable rules where tenure is protected and explorers and developers have clear performance obligations. It's not a one-way street. If you get a prospecting right, you should have performance obligations too. It must be free of corruption, rent-seeking, and self-dealing. It would help if it was free of incompetence too. My experience is that this is increasingly the case across the world and in many African countries, with some obvious exceptions, South Africa being the most obvious exception. I can tell you many horror stories of what I've heard about our DMR, our DMRE and SAMRAD, and our saving grace is that our courts have repeatedly found against our department. We have an independent judiciary. But sadly, no investor willingly invests if they expect to have to defend their rights at great expense and over years in the courts of a foreign country. This is not something a country should be proud of. Although things have apparently improved under the new minister, the department is generally opposed to all forms of transparency and has been plagued by poorly implemented systems, corruption, and self-dealing in recent years. South Africa is the only major mining country in Africa that still does not have a transparent, efficient online cadastral system where any citizen or interested party can see who has what right where and for what and when it expires. So I hope I've made my case that you need all three circles in the Venn diagram, and if just one is missing, you will have no growth in your mining industry. So what are the results on the scoreboard? So S&P Intelligence's data on exploration budgets for exploration mining companies operating in Africa provides a rough scoreboard to see which countries are making progress and which are not. I have collected the data from 2000 to 2019. The 2020 data has just come out too. I don't have that yet, unfortunately. Global exploration spending is very volatile as it depends on a huge range of global factors like investor sentiment, commodity prices, performance of completely different investment classes, etc. Global exploration spending is always a speculative investment, and this type of investment can come and go like the wind. I've separated out the exploration budgets, S&P Intelligence's exploration budget data from that of the rest of the world, and this is what it looks like for Africa in aggregate. You can see the steady growth to 2008, then the global financial crisis sees it drop off. It recovers as the stimulus spending drives the commodity boom on. And at a height, we had just more than $3 billion spent in Africa on exploration, and then it drops off again. It is my feeling that the first collapse was largely global factors between 2008 and 2009, whereas there were a lot more country-specific issues in the second drop-off. African countries are competing against each other for this roughly 12% share of global exploration money. Attracting mining investment or early stage mining investment is a competitive endeavor. Not only must African countries compete for the investment against each other, they must also compete against renowned mining investment destinations like Australia and Canada, and also emerging mining countries elsewhere in the world. Both Australia and Canada individually attract more exploration spending than all 54 countries in Africa collectively. And that's not because they have better geology. I think it's useful to compare exploration spending between African countries in percentage terms. Here are the current top 10 countries over the last 19 years, with the rest representing the other countries in Africa. Notable changes are South Africa's decline from 35% of all African exploration spend to less than 8%. Tanzania had a dramatic decline between 2017 and 2018, thanks to President Magufuli's attack on the mining industry. Ghana is a perennial steady performer. Let's go through the top 4. Here we have the DRC. I believe it might just have lost its #1 position. But you can see it coming out of effectively the war in the early 2000s. And effectively, the DRC is a country with a very high pay limit, but spectacular geology, which compensates. And that explains why it's been able to attract the most exploration spend in Africa. A very significant portion of it is thanks to one company, which is Ivanhoe Mines. #2, Burkina Faso, which has experienced a dramatic gold boom. I think it's had 20 or so gold mines developed in the time period we're looking at. #3 is Ghana, perennial favorite, something between 5 and 12.5% of Africa's exploration spend. Importantly, Ghana, I believe, has had a very steady mining regulatory environment, in that they haven't made any major changes to it in 2 decades. And then over most of those 19 years, South Africa was #1 for African exploration spend. But there's a very telling story here on the left-hand chart, because it hit its peak in 2002, which, if you remember, that's when the MPRDA was passed by Parliament. In 2004, it was promulgated. It's been downhill ever since. We are the biggest loser in the competition for African exploration budgets. Without being able to attract early stage investment, which is generally only available from Canada, Australia, and the UK, our mining industry cannot grow, and we have lots of competitors. So I hope I've made the point that the game of attracting mining investment is a highly competitive sport. There are definite winners and losers, and what it takes to increase performance is not rocket science, and nothing has to be reinvented. But you have to be outward looking and open. Inward looking navel gazing with only South Africans in the room discussing how to fix our problems will not fix the problems. You have to do the best you can with the obligatory elements of the Venn diagram. And if you do, you will serve your country well. Squander what you already have, and the decline of your industry is inevitable. I think, to conclude, we're at an inflection point in the South African industry at the moment. We've feasted off our sunk capital for 20 years. And now people are beginning to realize that it's time to attract exploration investment. Certainly that's the noises we're hearing from all parties. We don't need to invent anything here. We simply need to emulate which countries have done best. And we need to do that by investing in the geological endowment. We can't change the geological endowment, but we can certainly invest a lot in it. We desperately need a world-class regulatory environment. And then we need to drive down all the government-imposed costs and risks so that investors can have some confidence that they can earn a reasonable return. Only then will we have a mining industry that the mining engineers in first year at WITS today a mining industry that will be able to employ them after they're 40 years old. Thank you.
Thanks, Paul. That was fantastic. And I'm sure it's going to generate discussion. So let's open up, everyone. You can put your videos on and let's get some questions and answer going. Who wants to kick
I was
off?
just saying, a lot of the text and comments that I've seen here, there's a lot of criticism against the Council of Geosciences. Maybe we should also just look at that in particular when we discuss this.
Okay, agreed. Who wants to kick off? Bill?
I can just kick off there, John. Paul,
John Blaine,
we haven't met, but you're playing the same song that we were playing back in the early 2000s with Alan Sard and the Foreign Investors Mining Association, which was a group of about 30 foreign-owned companies at that stage. And Mr. Mantash was one of the people that which joined us to discuss developments in the MPRDA and how we would go forwards. And he was not even in government then. And since he's been in government and now in his current position, it's taken him 20 years to wake up. So I don't think we should wait for him. I think you're correct. There's got to be pressure from outside. But how you motivate outside investors to come and talk to the government when in fact the government is so inward looking. I really commend you on your efforts. I will support you wherever I can, but it's a long, hard road, and it's going to be for guys like you to really push hard, get the outside investors to come and push on the government here to make a difference.
No, thanks for that comment. I mean, I don't disagree. I don't think, big government had a negotiation with big business and big labor about the existing industry. That was 20 years ago. Okay. I don't know when people are going to finally realize that the chickens are coming home to roost and there's no longer an industry. There will be no industry to transform. There will be no industry to tax. There will be no industry to rent seek from. And I'm not sure whether, if you think about resource nationalism on a cyclical basis, it appears to me it takes about 20 years. If you look at the rest of Africa, right? So it took 20 years from when Zambia nationalized their industry, roughly, to where they had to privatize it again. It took 20 years from when Tanzania emerged from scientific socialism until President Magufuli turned on his mining industry. It's taken us 20 years from when we completely overhauled our mining regulatory regime to where people are beginning to realize that sunk capital can only last for so long. And maybe that's if you are young, even younger than me, and looking at a career, you have to go to those countries that are at the beginning of the 20-year cycle and not at the end. And we at the end of the cycle, and I'm afraid that, like stock market cycles or anything, calling the bottom is going to be the case. I think I do take some comfort from what happened. We are all talking to each other on broadband internet today, not because the government instituted policies to enable broadband internet. We are talking on broadband internet despite government's policy, because Altron, the company, sued the government to allow them to put fiber optic cable into people's homes. So I don't think anything will be achieved by the Minerals Council talking to the government. It's the wrong people in the room.
Yeah.
So my presentation is depressing, and the people I feel most sorry for is youngsters who think they're going to be able to spend a career working in the South African mining industry. And I wish we could get through to them, because it's 25-year-old mining engineers who should be saying, but you're killing my industry. I'm never going to own a mine. I might through my pension fund, but I'm going to be unemployed when I'm 40.
Well, South African universities are great teaching environments. They probably still don't expose students to enough of the mining industry, mainly because it costs money to ship students around and take them to the existing mines. But there are good geologists being produced still, and many of them are keen on exploration. They end up in other countries. Now, they can always get their skills there, and hopefully come back and apply them in South Africa. But who's going to drive the change? That is just the big open question that I can't see, because South Africans trying to convince the South African government just hasn't worked. And even when we had 30 foreign investors in our Foreign Investors Mining Association, it still didn't work, largely because they were all trying to get their rights through and they wouldn't put their head above the parapet. So most of them left.
Well, you know, of course, why do you think I can stick my head above the parapet? Because I'm not beholden to DMR. I will never get a prospecting right in South Africa. Yeah. You know, and that, so there's too much discussion that happens from a position of reasonableness in a dark room without any transparency. You don't argue with crazy from a position of reasonable, because your solution's going to be half crazy.
Yeah.
Which is still crazy. The industry, the trajectory of the industry, and I really like to emphasize the word trajectory. When Charter 3 was a departure from Charter 2, the trajectory was set. The question is, what's in Charter 4? And I mean, I almost wonder if there's some sort of cognitive dissonance that allows people to think that a charter, that it changes from one to the next, can introduce regulatory certainty. It's like a logical failure, isn't it? If you're changing every 5 years, how does that introduce certainty?
Well, it's Darwinian in its philosophy that you keep shooting yourself in the foot and expect it not to hurt. You're eventually going to have nothing to stand on.
Well, let's see.
If I can chip in there, I think you know, John, it's not their feet they're shooting. They continue, you know, this magic life. Government salaries, half of the economy is out of work at the moment because of the so-called pandemic, and lots of other things. This is all driven by, you know, an ideology. And, you know, Paul, I think it was a fantastic presentation, and certainly the chart that you showed, you know, of the exploration spend since the early 2000s in South Africa was also in my presentation, and it just tells the full story. And now, if you go back to the 1990s, when South Africa opened up in the early 1990s, there was a tremendous boom in investment all the way through to 2002. And it's shown partly in your chart, because it was the feel-good factor for South Africa. Things were changing. Ground was starting to open up. I worked for De Beers then, and I was involved with Julian Ogilvie-Thompson and those guys, convincing them to that De Beers should shed its unwanted mineral rights, and they did that. Anglo Platinum did a different thing. They went into joint ventures with other smaller ventures. A lot of people made a lot of money out of that up until the early 2000s. And after 2000, all that happened was Anglo Platinum ended up having to pay all of those people to maintain their shareholdings and keep putting never-ending capital into those things. But I was involved to some extent in the movement from the Oldsman period, from the movement from the old Minerals Act of 1990, which still, in my opinion, was a very good act. It was a major change in the mineral rights situation in South Africa and made South Africa, in my opinion, more attractive. There were some flaws, but they could have been ironed out easily. And then we went through the Green Paper with Marcel Golding and so on. And I don't know if anyone's got a copy of that Green Paper somewhere. It wasn't perfect, but it wasn't a bad document. That was presented to government. Marcel got shafted and booted out. And Penel Maduna came in, and the white paper was something completely different. And that's when all of a sudden, as you say, the the industry as it was then realized, hell, you know, we're going to have to look after all the focus was on maintaining the existing mining rights, and to hell with the rest. That's really what happened. And it was a case of survival. And then the mining charter came in after that, and it's been a case of gradually turning the screws all the way through. And us, you know, like you know, I'm partly involved in the game anymore, but I'm old enough not to care too much about it. But you know, about what I say. And the only thing that this government understands is losing in court, and they don't understand that fully either. Again, it comes back to they're not spending their money. They think they can go on forever, and then they will just change the laws to suit themselves further down the line anyway. I know it sounds a very negative attitude, but that's the reality, and that's what we're up against, and we need to understand that. And I agree with you entirely. This is not a negotiation. These people need to be told the brutal truth. It's critical. There's not much time left.
I was talking to a friend yesterday about that a mental image I had of, you can imagine a street with a row of supermarkets, and South Africa has at its supermarket Gwede Mtashe in military fatigues, armed to the teeth with a dagger between his teeth, with barbed wire and sandbags and landmines. And he's guarding the entry to South Africa's mining investment supermarket. And next to it is a whole row of supermarkets that are just open for business. And he's saying, come and negotiate and I might let you in.
Yeah.
When you can just walk into any other mining environment and invest there. And I mean, that's why I try very hard to add data to the arguments, right? Early stage mining investment flows from 3 places to the rest of the world. I looked hard to try and understand that. You can't get it in South Africa. Our savings base is not big enough, and our appetite is not at that end of the risk spectrum. So it only comes from 3 places, and go and look where that money goes, and then see what those countries do to attract that money, and then try and emulate them. I think if you wanted to say, well, what could we do about it, or what could be done about it? I don't believe that you should try and have a wide-ranging process to arrive at a better solution, right? I genuinely think you're not dealing with honest actors on the other side. And as soon as you go into a dark room, you're captured by them, and the solution's not going to suit you anyway. I think the only way to take this on is as the network providers did in the broadband industry. You have to pick a narrow issue, build a wide coalition, and go after that. And that narrow issue for me is about transparency on mining and prospecting rights. And it is diabolical that with our world-leading constitution, that public information is held secret by the state. And the last time they published any comprehensive prospecting right to mining right information was in 2010. But it's not, I mean, it's for investors that need it, but it's also for communities and environmentalists and organized agriculture. We're having pirate coal miners start pits on farms without even a mining right, where farmers are waking up to find a security fence and yellow equipment on their farms. Just read today's Daily Maverick to see that. I mean, so I don't really want to have a high-level policy discussion, because I can't win that argument, right? I mean, but what we need to have is a narrow issue that can bring many benefits. And for me, the only one is complete disclosure of the dysfunctional data that underlies the administration of our prospecting rights and mining rights. Publish it. But of course, the advocates for the industry, the Minerals Council themselves, won't even publish their own data. The Minerals Council's members have signed a members' compact committing to transparent engagement with society. Most of them are not even in compliance with the MPRDA's regulations that require them to publish their social and labor plans on their website. the hypocrisy coming from our organized industry is unbelievable. They don't publish their own Regulation 2.2 diagrams. They don't publish their prospecting rights and mining rights. And they say it's because the government is the regulator, they must regulate. But they know as well as we do that the government regulation is entirely dysfunctional. But they sign up to the King Code and the International Council of Mining and Metals Transparency Initiative. They do all those things, but you can't find out in South Africa where Glencore has prospecting rights. You know, and does anyone see the problem with that?
Yeah, Paul, I mean, they're just extending on that. I mean, there's a real problem in terms of credibility, you know, with the MC, and we've talked about that in the past. You know, equally, there's no leadership. I mean, Bill mentioned, you know, working with the hierarchy and Anglo-American back in the previous dispensation and beyond when the changes came about, and you know, those organizations, you know, had leadership. So you can imagine if there was an issue that Jot or Ogilvy Thompson didn't take kindly to, I mean, he had a direct line to the minister, and you'd be onto the minister and things would be fixed, you know, quickly. And that sort of leadership no longer exists because the politicians are on the driving seat. But I think, just to add, there's another aspect which is very, you know, very also relevant and quite sad, is that if you look back at the BEE process, which the mining industry, you know, actually drove in a sense, and we ended up with the big six or big seven, depending, you know, who you include in that: Patrice and Tokyo and MZ, Kamalo and Bridget Kadebi and so on. It's very sad when you look at those people. So they were given back then 26% a slice of very valuable cakes back then. But if you look around, not one of those people, other than maybe Patrice, have actually gone and created new businesses, new mines, new jobs. You know, they effectively, and I was very involved in the whole empowerment and enrichment of Tokyo Sequali, and none of them, you know, have really stood on a platform and said, this is how we're going to rebuild the industry, or this is our plan. You know, and you compare that back to the change in the English Afrikaner dispensation, and when the Afrikaners came to power, and you know, General Mining and all those big companies, Anton Rupert and company took the gap and built, you know, serious industrial businesses and mining businesses, and we didn't see that happen back in the change of politics in this country, and I think that's also very sad. So there's no, you know, there are none of those people also providing leadership into the industry. And of course, none of them really had background or experience in exploration, but they were, you know, we all agree there had to be transformation. But I think that whole BEE process or enrichment process also didn't help our case, and we're paying for that legacy as well.
There's a grim history, John. There's a grim history. You just need to read the books, right? Yeah. And I completely understand why a grand compromise had to be reached to transform the industry. And I completely support employment equity in the industry.
Sure.
And the history is awful, and the psychological scars and the intergenerational trauma that can be blamed on the industry is horrific. That all exists. But what do we tell an 18-year-old who wants to be a mining engineer? It's like, we need to be future orientated, because this thing's coming to an end. You know, so we can all reflect on what happened and where they are, and I suppose it's the nature of this particular audience to be quite nostalgic. But what do we do for the
future and the youngsters? Yeah, well, you know, I guess sadly there, what we're seeing, and we've all got personal experience of it, is that most of our good youngsters, and it's all colors and creeds, are ending up offshore and populating the rest of the world. And that's a very real worry.
We enlighten the young student by telling him, giving him these tools, telling him what he's supposed to demand. We start making him part of the driving force. Maybe it's time to fight fire with fire and be more subtle, more nefarious in our approach. go to the Council of Geoscience, use the people that we know inside there, get them to start getting the data together, to start publishing it despite orders to the contrary. And then we build on that database and we start making it available so that that database becomes public domain. Maybe that's the way, the positive way, eating it like an elephant bit by bit, using the youth and the people that we know in geoscience.
Talking about geoscience, I mean, am I wrong to be incredulous that geoscience asks you to first demonstrate that you've got a prospecting right before you can see data? I mean,
Paul, it goes beyond
backwards?
Yeah, Paul, it goes beyond that. So you're absolutely right. But for the past 5 years, I've helped a hell of a decent young black entrepreneur to try and get a project going at Bakerville. In fact, Mike DeWitt, who's not on here today, he's just been there and helped and met and helped the youngster. But we wrote a letter to the CGS, the CEO, in 2017. It was September. 2 months ago, he got a whole bunch of data, but he then had to sign a confidentiality agreement so that, you know, he could access the data but almost cannot use it. And that's how ridiculous it is. And never forget, the CGS for years had a bilateral arrangement with the Canadian government. So all of those people who used to go to the PDAC and man the boozers and go on shopping trips, you know, including the existing CEO, they were regularly talking to the Canadians and, you know, supposedly learning about flow through shares and information and exploration. But, you know, none of that has benefited, sadly. Anyway, other questions, comments? Where do we find the sweet spots and the soft spots?
Is there not a soft spot in government itself? I mean, they very strongly believe in centralization. If things should be centralized, shouldn't all core, for instance, be centralized? All mapping, all geological data, as is done in Australia, Norway, other places, they have central core repositories that are government controlled. If you can convince the government that centralizing but then allowing access is part of their centralization, is that not a possibility? It's devious as hell.
I think in Australia, I think it's not provinces, but statewide, state geological drive the data. They compete with one another. It's very Canada, and you know, in South Africa, I don't think we're big enough to be able to, you know, fund how many provincial geoscience centers we need. It's just too much. A national one is the way to go, but it needs to be sensibly managed. And a thing that always strikes me is I look at, you know, the first full geological map of South Africa was published, I think, in the early 1920s. Alex de Toy and all those guys. I mean, the Witwatersrand goldfields were only discovered in what, 1886 or whatever. And you look at what happened in a 20-year period with two major wars, one local and another, you know, global, interspersed. Those guys, you know, put together geological information that is second to none. They mapped out all the major structure, the major, you know, geology of South Africa, and they identified many of the major mineral deposits.
On and on foot.
And it can be turned around actually with the right kind of policy and so on. But you know,
I make a point?
The minerals of the future are going to be different to the minerals of history. And the only way to drive that is to open up the prospecting rights so that people can explore, they can invest in whatever. And that's anathema to this government of ours at the moment.
So I need to make the point. 17.2 of the MPRDA requires that the regional manager or the minister must reject an application for a prospecting right that does not have an approved prospecting works program, evidence of technical skills to implement it, and evidence of funding to implement it. Okay, so it's unlawful for the minister to award a prospecting right to someone who does not fulfill those basic requirements. Thousands of prospecting rights were awarded and continue to be awarded to people who meet none of those requirements. And in fact, there are more GSSA member CVs on prospecting right applications than there probably are GSSA members. In fact, I'm deeply disappointed that the professional organizations in South Africa take no interest in the dysfunction in the regulatory environment and in fact become academic sounding chambers, echo chambers, right? I think it's deeply problematic that people can have their CVs attached to multiple prospecting right applications such that they would be working 48 hours a day for the next century. And I mean, that is a fact. That's what happened. To participate in corrupting the system is a problem, right? And I think a lot of professionals need to be held accountable for that. You can't just apply for rights over huge areas where all you're doing is going to be hoarding those rights. So that's the one fact. Then the other thing is if the prospecting rights were awarded lawfully, there then would be prospecting works programs implemented, and there would be data coming out of those, and that data is required to be submitted to the Council for Geoscience. So that whole process was initially used by activist officials to try and transform the industry, and then later by corrupt officials to try and, in the interest of self-dealing, right? So now we've got a completely broken system. The other thing is that unless you push and push and push and push, the DMR doesn't do anything for you. But if you don't want them to do anything, you don't push. So if you've got a converted old order prospecting right that you've applied for a renewal on, and you don't really want to relinquish that grant, you simply do nothing because it never expires. Nothing gets done, and you hold that grant forever. Okay, so the use it or lose it principle that was inherent in the Act is broken. So that's why I'm saying I can't fix all of this, but if we could just have transparency, it would help.
Yeah, 100%.
John, I'm going to have to drop off shortly.
Yeah. No, thanks. That was a great presentation and lots of food for thought, Paul. And just to extend a last point there, I mean, the other thing we need to get rid of with respect, and they have good uses as well as all the lawyers, because all these complexities you talk about, the lawyers feed off. So I think if you look at the growth in the legal companies in Johannesburg, so much of so many of our systems are driven through legal processes, and that too is another big problem. But your point about the profession is equally valid, Paul, and it should be addressed.
Geologists have something to answer for because there's a geologist CV attached to every prospecting right application. Okay, knowingly or unknowingly. And if you've got an ethical organization that you belong to with any kind of ethical standards, the least you should do is ensure that when your CV is attached to a prospecting right, that it is basically rational what you're applying for. I mean, cut and paste prospecting right applications are ubiquitous.
Paul, the GSSA has, and SACNASP, have mechanisms to enforce that, but they can't do anything unless, people, if there are people like that you're talking about, submit to the GSSA. I mean,
I wrote a formal letter to the GSSA on their request in 2016, expressing my concerns. I did not as much as get an acknowledgement of the letter. Okay, so I've got no time for anyone who claims to have ethical standards, but then does nothing to operationalize those ethical standards. It's not only about publishing
to hop in there, Paul. I am currently the Vice President for Professional Affairs at the Geological Society. It's a recent appointment. I am not aware of any of those concerns that you wrote, and I would be grateful if you would resubmit that complaint, those issues directly to me, and I will do something about it. And everybody else on this call knows me, and they know I will do something.
I appreciate my skepticism, right? The problem here is the capture of the South African state, the corruption that we've allowed to manifest within our mining industry should be a problem for all our professional bodies, and yet they barely ever address it. And all I can say,
address it if we don't know about it.
Prospecting rights currently, there's a geologist CV attached to every single one.
And Tanya, just to add to that, and it's great that you're there. But we need. I support Paul, and we need to, for example, go and look at the classic case of the Gupta uranium mine, and that was a CPR that should never have been accepted, and that got the whole way through the profession, and it got all the way through the JSC as well. Happy to give you some more background on that one as well.
With that one, John, there's a lot more than was simply available. That was a political decision. We had nothing to do about it. We were completely overridden by politics.
Yeah, well, then why should we be overridden by politics? That's what Paul's point.
So the one thing I would like to suggest, and I will send you that letter, Tanya, and thank you. And I don't want to overplay that, but it is in the interests of the profession for there to be the legally required transparency, right? And I'm just gobsmacked that people aren't interested in taking up these issues. So a PIA application requesting the data on every single prospecting right and mining right should be the kind of thing the GSSA could apply for. And if you don't receive it, if you then receive it, your members could then take that data dump and do something useful with it. It is legally public information that's held secret from your profession, and it's going to hurt your young members.
Paul, I just want to say to on behalf of Oleg here, who hasn't got a mic, he wants to make a correction. He says that the data goes to DMR and not to CGS. They're supposed to get it from DMR, and it doesn't always happen. But yeah, I think we need Tanya and the people to actually exercise their right to get the information, not to sit back and wait for it.
Look, I mean, I have to say, in my involvement in coal, the geologist consulting to me was Professor John Hancock's, and we did some exploration in KZN, and I asked him to write up his findings. They were negative, right? There was no economic coal on the property we had, and we submitted it to the Council of Geoscience in KZN, and I think they were gobsmacked. It was a huge surprise that a company that had explored a property, found nothing, would then submit their report. But that's what, if you behave ethically about the geological endowment, I think you call it geoethics, right? Then every geologist should be the person ensuring that the data is submitted somewhere. I mean, surely
that's to ensure that the geologists do that.
Okay, I mean, there's another discussion point that we've got for the next set of talks. So all good stuff. Thanks, Tanya. Thanks, Paul. And if you're dropping off, we really appreciate your efforts and your very interest. I guess we also should probably start winding up. Any other comments, suggestions, talks for the future?
Paul, just call me when you have a moment, please, afterwards.
Okay. Thank you. Bye-bye.
Yeah,
Thank you.
He wants to charge, and he's going to charge you for the map that he produced for you.
Thank you very much, everybody, and looking forward to seeing you at the panel discussion next week.
Okay, and 2 minutes, Henny. Is anyone else, just to wrap up, to see that we've covered all the bases? We don't want to just kill everyone. So you got any last
urgent questions, statements?
Peter van der Spey, you've been very quiet today.
Paul has left us anyway, so yeah. Thank you, guys. I think we can wrap up. Yeah, we see you next week.
Yeah, and look forward to taking the discussion further. Thanks, Henny. Thanks for running the show.
Thanks, everyone. Cheers.
Thanks, and bye. Cheers.
Yeah.